Hi, this is a video about scalping. What is scalping and how to do scalping in forex market. Before going into how we can really do scalping and what are the different methods that we can use for scalping purpose. First let's see like what is scalping. Scalping is targeting for a small number of pips like 5 pips or 10 pips instead of targeting for 50 pips or 100 pips. It's only just entering the forex market for a few pips and just wait for 30 minutes or an hour and exit the trade with a small profit. That means 5 to 10 pips. It's not like day trading where you can stay for some few hours or normal trading where normally traders stay for for few days. It's just only for a small time frame you will be in the market and exit the trade with a small profit. Since it is targeting for only few pips, normally it is used. This technique is used on a lower time frame charts like 5 minutes or 15 minutes. Actually, there is a lot of argument between traders whether it is really scalping is really helpful or not. But I don't want to go into those details. But since a lot of traders still use scalping techniques, and this in this video, I would like to show you some of those techniques. Simple techniques, basic techniques, how you can really scalp for forex market. Scalping can be used, in both the range market and trending market. So this video is how to really use scalping in trending markets. So if you see this chart, this one is in trending market, and this is yesterday, which is on 30th of December 2013. So if you see this one, the market is trending. So just let me try an arrow. Okay, so the market is trending in this direction. So okay. Okay, so the market is turning in the upward direction. Normally, traders use a lot of indicators and different techniques when the market is turning in the upward and downward direction. So some of those techniques is, you can use different indicators, and one of that indicator is CCI, which is the commodity channel index. So this is CCI, and you can use the default period here and put that indicator on this chart. So normally CCI consists of two levels, which is minus 100 and plus 100. So it is a general thing that when the indicator is going below minus 100, that indicates a oversold region, and when the indicator is going above plus 100, that indicates a over bought region. But this is not always true. That is true only for the range markets. That means in the range markets, when the indicator is going above 100, that means it's an overbought region, and when the indicator is going below minus 100, that means that is a oversold region. But in trending markets, you should not take that into consideration. In a trending market, you have to enter the trend whenever that indicator is crossing the plus 100 line in the upward direction. So if you see this one, the market is in the upward direction, and if you see at this point it is crossing, the indicator CCI indicator is crossing the plus 100 line in the upward direction. So this is the entry point for a long trade. So if you enter here, you can really target for 10 pips, and you can exit the trade. And again, another point is at this point, if you see this one, again this has crossed in the upward direction. If you see this one, again this has crossed in the upward direction, the plus 100 line. So this is how you can use CCI indicator to scalp forex market when the market is trending. So you should not consider that CCI indicator, since it is in the above 100, that means this is an overbought market, or if it is below minus 100, it is an oversold region. You should not consider that point in a trending market. And trending market, it is different. You should enter the trades only when the CCA indicator is crossing the plus 100 line in the upward direction. So if you see this, these are all the different points. So this is one way, this is one indicator that you can use to scalp the forex market. Okay, the second indicator that you can use is sorry. The second indicator that you can use is the Bollinger Band. So you can use again the normal, default settings for the Bollinger Bands. And once you put in this one, so you can see that the Bollinger Bands is moving in the upward direction. That means the trend is in the upward direction. So normally in an upward direction, in a trending market, whenever the price retraces back to the middle band, that is an entry point for a long trade. So see this one. So the price has reached the middle band at this point. So this is one entry point. This is another entry point. This is third entry point, and this is another entry point, fourth entry point, and this is another entry point. So this is how you can really use Bollinger Bands for scalping forex market. So this is the second indicator that you can use. And a lot of traders also use alligator indicator for scalping forex market. So just put this one and use the default settings. So if you see this one, so this is the alligator indicator. So normally the alligator indicator consists of three moving averages. Okay, so these are the three moving averages. So whenever they are spread apart and they are moving in one direction, that means in the upward direction or downward direction, that means the market is trending. So if you see this one, the market is trending in the upward direction here, and you can enter the market whenever the price reaches the middle band, or normally it is the middle band, or sometimes you can also use the lower band. And the price has reached the middle band here, so you can use this one to enter the market, to enter into the forex market. So if you see this one, this is where the price reached the alligator indicator, and this is another one, and this is another one, this is another one, and this is another entry point. So and a lot of traders use this indicator, alligator indicator, for trading actually. So this is how you can use this indicator for scalping forex. and and in this video, the last way is I would like to show is using chart patterns. So there are a lot of chart patterns used by forex traders. There are some continuous patterns and also reversal patterns. For reversal patterns, there are like double tops, double bottoms, head and shoulders pattern, and reverse head and shoulders patterns, like that. There are a lot of patterns are there for reversal. And for continuous patterns, there are a lot of things. There are like flags are there, triangles, wedge patterns, and triangles, wedge patterns, rectangles, like this. So all these ones can be used as continuous patterns. That means whenever the market is trending in one direction, and whenever you see these kind of continuous patterns like flags, triangles, wedge patterns, so you can enter whenever those patterns are broken, you can enter the market in the same direction, in the trending direction. So if you see this one, there are actually a lot of things are formed in this one. So if you see, so this is a triangle pattern. Okay, see, if you see this one, this is a triangle pattern actually. So the triangle pattern is broken in this direction. So this is what your entry point is. And another one is, you know see this one, see this one. Okay, see, this is a rectangle pattern actually, similar to rectangle pattern, this one. So this is another pattern here, and there is another pattern which is another triangle. So if you see this one, this is another triangle pattern that you can use to enter the market. And if you see this one, this is another rectangle pattern. okay, are a descending wedge pattern here. So if you see this one, so there are these are like different chart patterns that you can draw in a trending market. See, this is a triangle pattern, this is a wedge pattern, or sometimes like people might think that like this is not really a wedge. This is not really a rectangle. So some of the people might also draw a triangle pattern at this point. See, if you see this one, so this is a triangle pattern. So it really depends on you whether you think it as a rectangle or a triangle, but anyhow that's a continuous pattern actually. So once this is broken, this is your another entry point, and this is another triangle, and this is a wedge actually. So these are the different chart patterns that you can use um, for scalping the forex market. So these are the different chart patterns. So these are the different indicators or techniques that normally most of the traders use for scalping forex market. But when can you really stop scalping? That means the market is trending, but how do you know that the trends always reverse sometimes. So you cannot really go in the same direction scalping the market. You cannot really scalp the market always. So when can you really stop scalping? So to do that one, see this one, see the market, just try a trend line here. See, this is how, this is the trend line it is, and if you see the trend line is broken here, that means the trend, it is not going to be a trend anymore. That means the trend might reverse in this direction, or or it may go in a range bound market like this. Or it may go in a reverse direction like this. So at this point you have to stop scalping. That means you can clearly see that the trend is broken at this point. See, the trend is in this direction, but you can clearly see that the trend is broken in this direction, in the reverse direction. So you have to stop scalping at this point. You cannot really enter scalping at this point. You have to stop. And moreover, whenever the trend is started, obviously there are a lot of chances to start, for scalping purposes. Not whenever the trend is already over for some time. You cannot. It's not really a good idea to enter into scalping because the trend might reverse at that point. So it is always a good idea to enter into scalping at the beginning of the. Beginning of the trend instead of at the end of the trend. Okay, so not only these ones, there are actually a lot of uh, different techniques are there. What are the ones that I showed you, which is CCI, Bollinger Bands, alligator, and the chart patterns. They are all the basic indicators that you can use for scalping the forex market. But there are some advanced techniques also where you can combine more than one indicator together, and two indicators or three indicators like a MLCD indicator and Bollinger indicator and moving averages like that. You can combine all those indicators, and you can form powerful scalping techniques. Sorry, you can form powerful scalping techniques. So if you want to see all those scalping techniques with different indicators, just visit my channel, forex base. This is a channel on YouTube which is completely concentrating on forex trading. So just visit this channel. Just type like youtube.com/forexbeats, and you can come to my channel, and where I have divided all the videos into different things like forex trading strategies, where you can find different forex trading strategies at this one, and forex scalping strategies. So here you can find the different scalping strategies like 1 minute scalping strategy using EMAs, MACD and stochastics, and parabolic SCR, SMA and CCI scalping strategy, stochastics, EMA band scalping strategy, etc. So there are a lot of scalping strategies are available on my channel, and you can also see other channels, other playlists here, where you can see different forex indicators and forex basic terminology, and different forex brokers. So this is my channel. Just visit, and if you like this one, just subscribe to my channel here. And anyhow, and all the best for your trading. Thank you.